Assalamualaikum warahmatullahi wabarakatuh. My name is Ahmad HUZAIFAH bin DOLHADI and my matrix number is 1914840. So today I will explain about the introduction. Money. Money can be classified as an instrument to buy goods and services. The government in a country must be responsible for the country's finances by controlling the flow of money in and out to balance the financial status. Money has functions such as a medium of exchange. It is used to pay for goods and services. The use of money as a medium of exchange promotes economic efficiency by minimizing the time spent in exchanging goods and services. Secondly, a unit of account. Money is used to measure value in an economy. Since everyone views money as valuable, it's an efficient way for sellers to price goods and services and buyers to determine whether the value of the good is worth exchanging for money. Lastly, store value. A store of value is an asset that maintains its value rather than depreciating. A store of value is essentially an asset, commodity, or currency that can be saved, retrieved, and exchanged in the future without deteriorating in value. However, the central bank has right to check your daily transaction and evidence of every transaction through the other bank. Traditional finance transaction charges are imposed high if it involves an overseas payment. The data between parties is not transparent to others as it is treated as confidential. Compare with decentralized financial. The transaction between two parties can be done without an intermediary person or third party. It also doesn't have a central authority over the financial services. So each crypto decentralized currency control is performed via blockchain, transparent transaction information that work as a distributed ledger. So it is cheaper and more efficient when there are no extra charges to send substantial amounts of cryptocurrency in the transaction to others. DeFi also secure by using blockchain technology and enables users to use economic activities such as investment, borrowing, and lending, and digital exchange currency. Digital currency is a form of currency that is available only in a digital or electronic form. It is also called digital money, electronic currency, or cyber cash. Through the digitalized mode of payment, money printed will be less and lead to a virtual payment mechanism. It is permanently stored on a computer network and shared digitally. Digital currencies also enable instant transactions that can be seamlessly executed across borders. For instance, it is possible for a person located in the United States to make payment in digital currency to a counterparty residing in Singapore, provided they are both connected to the same network. Due to this, research is still ongoing in America into central bank digital currency (CBDC) through Project Hamilton. So, digital currency can be centralized or decentralized. Fiat currency, which exists in a physical form, is a centralized production and distribution system by a central bank and government agencies. Prominent cryptocurrencies such as Bitcoin and Ethereum are examples of decentralized digital currency systems. Hashimiju et al. State that digital currency has cryptocurrency and non-cryptocurrency. For the problem statement, the first one is the community's perspective on cryptocurrency. Second is the negative impact of cryptocurrency usage. Third, the Sharia view towards cryptocurrency adoption in economics. Our first objective is to identify the element in cryptocurrency and how it works. Secondly, discuss the acceptance amongst the people towards cryptocurrency in the future. Thirdly, to examine the opinion and permission among Muslim scholars to use a cryptocurrency. Lastly, to identify the sustainable development goals related to cryptocurrency adoption. So I will pass to the next presenter.
Assalamualaikum. My name is FIRDAUS bin YUSOF. My matric number is 1929901. So today I will be presenting about background and history. Pictured 2017, in the opinion that cryptocurrency refers to any decentralized digital asset that uses encryption to secure transactions that are not reliant on central banking, institutions. The name cryptocurrency comes from the fact that it uses encryption to verify transactions. This means that storing and sending cryptocurrencies data between wallets and to public ledgers requires complex coding. Encryption's goal is to ensure security and safety. Cryptocurrency is a platform that helps anyone to make and receive payments from anywhere. Cryptocurrency payments exist solely as digital entries to an online database identifying specific transactions rather than as tangible money carried around and exchanged in the real world. Cryptocurrencies operate without a central issuing or regulating authority instead of relying on a global system to track transactions and create new units. Blockchain, a distributed database system that operates as a self-regulating public ledger for all transactions, enable all of this. Bitcoin, the first cryptocurrency, was created in 2009 and is still the most well-known today. Bitcoin makes use of a digital technology known as blockchain, which is a sophisticated coding system that distributes a single code across thousands of machines. Blockchain breaks down the smaller code into smaller pieces and distributes them across other computers. If a hacker wanted to get access to the code, they have to break into several machines, said Chibaraj and Tomasek 2008. March 2017, in his article under Forbes, mentioned the history of cryptocurrency where Satoshi Nakamoto, an incognito for the still unknown developer of Bitcoin, who launched the first cryptocurrency in 2009, made blockchain famous. While Bitcoin remains the most well-known and valuable cryptocurrency on the market today, 2,228 per Bitcoin, Litecoin, Dogecoin, Ethereum Classic, Zcash, and plenty of other cryptocurrencies have since emerged, including Litecoin, Dogecoin, Ethereum Classic, Zcash, and a slew of others. The first rival cryptocurrencies in 2010 emerged as Bitcoin grows in popularity and the concept of decentralized and encrypted currency gathers momentum. These are also known as altcoins, and they aim to improve the original Bitcoin architecture by providing faster transaction times, anonymity, or some other benefit. Namecoin and Litecoin were among the first to appear. There are already over 1,000 cryptocurrencies in use, with new ones developing on a regular basis. In 2013, shortly after reaching 1,000 for the first time, the price of one Bitcoin begins to rapidly drop. Many investors will have lost money at this time as the price plunged roughly 300. It will take more than 2 years for it to reach 1,000 again. Later in 2014, Bitcoin has proven to be an attractive and lucrative target for thieves. Mt. The world's largest Bitcoin exchange, went offline in January 2014, and the owners of 8,050 Bitcoins never saw their money again. Investigations are still ongoing to determine exactly what transmitted, but whatever the case may be, someone deceitfully obtained a haul worth of $450 million at the time. Those missing coins are worth $4.4 billion at today's prices. During this time, the total market capitalization of all cryptocurrencies increased from 11 billion to nearly 300 billion. Banks such as Barclays, Citi, Deutsche Bank, and PNB Paribas have stated that they are looking into methods to deal with Bitcoin. Meanwhile, the blockchain technology that underpins Bitcoin has secured a finance revolution that is only just getting started. So I will go for the second part, platform to invest cryptocurrency. There are several ways and places to invest in cryptocurrency. In Malaysia, there are few platforms that allows people to trade in cryptocurrency. Anthony 2022 in her article mentioned few platforms to invest in cryptocurrency, and one of the platform is called Luno, which allows people to buy and sell in Ringgit Malaysia. Luno claims that in a single day, their platform records around 15 million in Bitcoin transaction and had also achieved almost 4.2 billion worth of transaction on its platform. However, there are a few pros and cons about this platform called Luno, where for beginners it can be easy, which they can easily switch between crypto and fiat currencies when trading. This also support credit card and bank transfers. As for the hassle, the fee is higher compared to other platforms, and the liquidity is relatively low, which it also does not support advanced trading tools. Another platform suitable for beginners that came from Malaysia is Synergy. Founded on 2017, that offers two types of crypto, which are Bitcoin and Ethereum. This platform does not require minimum deposit for investors. Nonetheless, there is no mobile application as for now, and there's only two crypto options available. Apart from that, Kraken is another known platform that led the investors to buy more than 19 different cryptocurrencies. Customers in the US who want to deposit money into their Kraken account have restricted alternative. To connect people's bank accounts, this site uses a service called Trustly, which Kraken claims work with other 1,000 financial institutions. If their bank isn't one of those, money will need to be wired into the account, which may require to call the bank to set up their transaction. People from the states of New York and Washington are not eligible to participate in the exchange as it is not available in both states. Kraken is also best known for crypto-to-crypto trading, margin trading, and also advanced traders. According to Rosen to 2020.
Assalamualaikum, my name is FARRAH I will continue with the literature review on the elements of cryptocurrency, how it works, and the acceptance as the future currency. As what has been discussed by HUZAIFAH and FIRDAUS earlier, we can see that cryptocurrency is a digital currency which excludes the involvement of any physical asset or money. It functions just like our money, but it uses digital coins instead. But Winfield 2013 said that Bitcoin has the ability to function in a wider range. We can see from here, it has to use the current technology in order to act as the means to secure and handle the transactions due to the decentralized or peer-to-peer network systems. So the first element that has been discussed by many studies is the relationship between the cryptocurrency itself and the cryptography. Mali and Rana 2020 said that the term cryptocurrency itself came from the words cryptography and currency. But why cryptography? Basically, cryptography is a system used to secure data information from being interrupted at the time data is processed. So this is aligned with Fauzi et al. 2020, which supported the effectiveness of cryptography to secure data compared to the system currently used by the credit cards. To add, there are three types of cryptography, which are the symmetric key, asymmetric key, and hash functions. And cryptocurrency usually use hash functions. These types of cryptography will function to encrypt and decrypt data from sender to receiver. This is to avoid the interference of any third party. So to highlight, the hash function uses no key but a fixed hash value, which makes it impossible to reversely find the original input. Next, the blockchain system, which is also very familiar when it comes to a discussion of cryptocurrency. Fauzi et al. 2020 said that the blockchain system used to prevent someone from using the same coins twice. This is due to the concept that blockchain records all the transaction details. It is aligned or can be supported with the definition given by Shatsky and Murawski in 2015, where blockchain is a digital distributed transaction ledger with identical copies maintained on multiple computer systems controlled by different entities. Fauzi et al. 2020 stated that cryptocurrency is produced by mining through blockchain. It consists of users, miners, node maintainers, and developers. FARRAH 2015 also outlined the use of blockchain, which is to record ownership of coins, especially after transactions occurs, complete with the timestamp to avoid double spending. He also mentioned the process where a blockchain is a record of a transaction which must first be verified using a mathematical algorithm. A block represents a single transaction and it will be connected to other blocks and later called a blockchain. It is aligned with the statement given by Mali and Rana in 2020 when they agreed that a record will be published to public ledger or blockchain after being verified by miners who receive rewards later. Moving on to the element of proof of work protocol. Referring to Fauzi et al. 2020, it is a process to verify a transaction and share it with other users in the same network. Users and miners use it to validate their identities as there is no centralized system to act as the security. FARRAH 2015 in his study said that transactions will be shared once requirements of POW are satisfied. Next, mining. It refers to the full process node goes through. According to FARRAH 2015, the miners are seeking for returns, and this will be explained later. The miners will add verified transactions into a block and connect it to other blocks after completing the POW. It can be seen from the statement of Fauzi et al. 2020 on the issuance of cryptocurrency by mining. This is different with current money, which is produced by the central bank. Hence, this work is complete is completed by the miners, and they must be rewarded for using their effort, their time, and the electricity bills. Continue with the acceptance of cryptocurrency. Firstly, cryptocurrency is considered to still stand at the early stages. Hence, we will look at some opinions on the acceptance of cryptocurrency. Fauzi et al. 2020 India studies mentioned that cryptocurrency has a similar portfolio to other assets such as gold and property. However, when the value of Bitcoin rises and more people are accepting it as payments method, it mimics people's sentiment. But using cryptocurrency as an alternative to fiat money is still considered to be premature in today's economy, as it requires more researches. They also highlighted the study by Kim 2017, who provided the critics of cryptocurrency itself. A lot of people question if crypto use type of asset currency. FARRAH in 2015 concluded that cryptocurrency is still mysterious. This is because there is a huge number of people who don't even know the existence of cryptocurrency. This statement is made by referring to the result of a monthly survey done by the coincenter.com. This survey is given to the Americans to collect their opinion on Bitcoin. It is impossible to determine the exact number of users because there is probability that a user to have many accounts. This can be tracked because cryptocurrency applies the concept of anonymity. So, last but not least, Malik and Rana 2020 explained the use of Bitcoin in India. It was first accepted in 2012, but now it has been banned by Indian government because it gives chances to drug dealings, terrorism, and other illegal activities to operate freely.
Hi, my name is FATHIATUL HUSNA binti MARZUKI, metric number 1928716. My friend and I, need on our aim, will cover discussion and critical analysis. I will explain a little about Islamic perspective about cryptocurrency, which is consists opinion of Islamic scholar BNM, which is Bank Negara Malaysia, and Islamic finance. So we move to overview of Islamic perspective regarding these issues. Islam encourages its people to progress in all aspects of life to achieve a better life. As such, Islam has set certain limits which are based on the Sharia, that is Ummah must abide for the good of that Ummah itself. Like cryptocurrency is not denied as new digital transformation in currency. This type of investment is really popular and trending now because of its attractiveness. Although cryptocurrency is not yet considered a legal currency such as Ringgit Malaysia, which is RM, and others, it is still considered as a commodity that can be traded and used as investment asset. In Islam, we must understand first the concept of money itself. If we can see scientifically, cryptocurrency like Bitcoin, for example, is a digital currency developed in the virtual world, use computer hardware entirely. We must understand that it is not physical in nature like banknotes, which is as is today. There are many cases which involve fraud cases. For example, what happened in Malaysia, reported by Liu 2018, that Media Prima Berhad email system was attacked by a group of cyber hackers, and they demanded 1,000 units of Bitcoin as exchange for the system to return to normal. This case show that cryptocurrencies are being targeted by criminal groups which are more difficult to detect than traditional money. Below we can see what we get from economists and Muslim scholars regarding money features. Next is about the risk of using cryptocurrency. Today, cryptocurrency as a new digital transformation of physical money still has risk to use like physical money lah. Fluctuation in value that is difficult to control and expected due to excessive speculation by investors, which is fluctuation or volatility. Risk of lacking to the system exploited by criminals for money laundering activities and funding terrorist activities, and the emergence of fake investment schemes based on Bitcoin and cryptocurrencies are reason why this kind of money is still unacceptable by society. To be understood, after evaluating the views from various experts and Islamic scholars, we have three opinions regarding cryptocurrencies, which are prohibited, can use, which is haruslah, and tawakuf, which is postpone answer to get answer after see many bright aspect of regarding this issue, which is cryptocurrency, to use for virtual currency. However, we can understood that this currency does not meet characteristics which is set in Islam, when it is not able to store value consistently. Although the public can accept its currency, the instability of its value of currency is open to harm to the user in the future. Based on observation of current practice by society, cryptocurrency are more seen as investment assets, which do not meet the original purpose of money itself, which can be an alternative for the current fiat money. So, this is how the scholars think regarding the prohibition of cryptocurrency. For today, governments and authorities also have the right to block any cryptocurrencies transaction to protect public interest. So now we move on BNM response to cryptocurrency today. To be more specific, BNM respond to digital transformation money, but current monetary and monetary policy tools remain effective in maintaining monetary and financial stability. The issues of CBDC needs to be complementary to exist payment instruments including physical cash to ensure that all Malaysians, especially the undeserved one, committees, get the service being continued access to secure and efficient payment solution if we want to use cryptocurrency in society. Now, we move to Islamic finance concept regarding this currency. Many institutional investors are investing billions of dollars in cryptocurrency. It will creating fake demand for them. Even if it is just 1% or one fund purchasing, which is 1 billion worth of cryptocurrency, that is significant sum of money in the small cryptocurrency market. As a result, the cryptocurrency will rise in value without having any real worth. We can see that cryptocurrency themselves may be legal. The trading aspect may be debatable. Okay. On the other hand, the other worry is the possibility of a security breach. Some Islamic banking experts disagree with this currency proponent who claim that because of their transparency, this virtual currency cannot be used for money laundering. To put in another way, the process is visible, but the cryptocurrency owners are pseudonymous rather than anonymous. Their token ID is the only thing anyone knows about them. In the light, anyone can purchase and sell currency and use them for criminal reason unless cryptocurrency exchange accurately store the data of their owners.
My name is Nur SYAFIQA Binti GHAZALI with matric number 1922434 from section 1. I will explain about the cryptocurrency with respect to SDG. As we have known, mining is the mechanism through which Bitcoin and other cryptocurrencies produce new coins and validate new transactions. The mining process is necessary to keep the cryptocurrency market functioning well. However, mining has been criticized as being ecologically unsustainable due to the amount of energy used. According to the New York Times, the amount of electricity used in each Bitcoin mining is more than the annual electricity consumption of 5.5 million people in Finland. Besides, all cryptocurrency mining facilities in Iran are required to shut down to avoid blackout. Furthermore, Tesla is no longer accepting Bitcoin payment due to environmental issues. Cryptocurrency carbon footprint also affect greenhouse gas emission. With respect to Malaysia, carbon emission is one of the 79 GEI indicators. The GEI is the Green Economy Indicators, which is a complementary tool introduced in 2018 and used by the government in measuring the SDGs. Lower energy efficiency is also a result of the transaction of each cryptocurrency, whereby it takes a long time to complete. Each transaction takes longer than a regular credit card transaction. We expect that the power consumption throughout the process of cryptocurrency mining will rise because there has been the emergence of several options for cryptocurrency nowadays. The price of cryptocurrency also has an impact on power consumption. The government and non-government organizations must focus their effort on resolving the issue of cryptocurrency mining's carbon footprint, as the cryptocurrency market has been criticized by the community. Therefore, the CCA is established to decarbonize the cryptocurrency and blockchain industries in record time by shifting from non-renewable energy to renewable energy. There are three main goals of the CCA, which are to develop guidelines and tools to assist blockchain in reaching the goal of using 100% renewable energy by 2025, to obtain net zero emission from all energy sources by 2030, and to reach net zero greenhouse gas emission across the cryptocurrency market by 2040. These objectives are in line with SDG number 7, namely affordable and clean energy. Clean energy is known as renewable energy such as solar, which is encouraged to be explored by the cryptocurrency market because this energy can be restored as it comes from natural resources. While adopting green crypto, there are several arguments that arise. Firstly, the cryptocurrency industry will take renewable energy sources currently used by other industries. According to the U.S. Energy Information Administration, there is only 20% of the renewable power generated in the US. Secondly, specialized devices to mine Bitcoin cannot be recycled and reused. As a result, it will cause electronic waste. There are other several options of cryptocurrency such as Ethereum and Cardano, whereby they are more sustainability friendly compared to Bitcoin. Ethereum is moving to a more sustainable mining mechanism. The founder of Cardano claims that it is 4 million times more energy efficient than Bitcoin. Therefore, we think that Ethereum and Cardano should be used in the cryptocurrency market instead of Bitcoin because it can save the energy consumption.
The last one is summary and conclusion. Cryptocurrency is still early in blockchain technology. The probability of cryptocurrency becoming financially decentralized is relatively intermediate event without the authorities' intervention. If the country wants to introduce a cryptocurrency to the community, it will take time to understand, and the monetary system in a country will change eventually. Even though transactions between parties are only through the internet, which can ease their payment activities, the government must have the initiative to acknowledge the faults if cryptocurrency payments have been accepted and regulated. Most people are still unaware of this platform, hence it is risky for people with zero knowledge about crypto things. Still, several factors will cause cryptocurrency to be unaccepted by the community if hacking cases increase, which will cause a person's standard of living. The government will play a role in tackling this issue before the worst happens. If the governments want to abolish cryptocurrency, they need to ban using the cryptocurrency platform. The government can restrict the platform that currently uses peer-to-peer trading or exchange to control the illegal activity in the cryptocurrency market. According to the Sharia perspective, most Muslim scholars disagree with the cryptocurrency as decentralized financial because the store value itself is unstable. Future research can be done by emphasizing the scope of the topic, as provide this paper focuses on globally, which is the content is too broad. Instead, the future researcher can concentrate on a country that has already embraced this cryptocurrency in its daily transactions. It is also worth mentioning the implementation process of digital currency. Second, this study was also made based on the assessment and opinion of Islamic scholar on the people's acceptance of cryptocurrency. Due to limitations of time and information about software engineering, the current research is incapable of investigating the elements of cryptocurrency such as staking, liquidity farming, saving and pool. Also, it will be a complementary part in the future research intend to provide a Sharia perspective towards cryptocurrency and in the forthcoming paper. That's all from us. Thank you. Assalamualaikum.